In this video, we're going to be looking at some added features in the options table and how they can help us as traders to maximize the information which the market is giving us. So, starting at the very top, I'm still at the options table link, which is on the menu option, options table. Starting from the very top, you get the instruments here at the very top, the Nifty, the Bank Nifty, Fin Nifty, and India VIX, all of which have weekly settlements. And we work, okay, the weekly settlement over here. So you get the composite value areas of the 3 day as well as today over here, the open, high, low, close, change LTP, the time, the trading range, the open, high, low, close, and the change, okay, of the futures as well, and the time, okay, at which the premium, etc., is over here. One thing, okay, you need to note over here is this change LTP. This is very critical around the settlement days. So every time, okay, you are nearing a settlement, let's say of the Fin Nifty on a Tuesday or the Nifty on a Thursday, you have a look at this closing column, which will give you the 30-minute VWAP of the last 30 minutes. So that has an impact on the open interest, which is already built up, and this value which is there is what the market gravitates to and is the closing level for the last 30 minutes. So anytime you're unsure about where the market can close in the last 30 minutes and what will be the netted price, this is the price, okay, which will be updating through those last 30 minutes. So take a note of this. You get the maximum min premium also, and the advanced decline over here. So this will give you an idea about what time the tables are getting updated. If you come down slightly below that, you get a section over here where we are focused on the information available via Gamma. So you get it for the Nifty, you can get it for the Bank Nifty. You just have to select that, and it changes to Bank Nifty. If you want it for the Fin Nifty, you'll be getting the Gamma wall range. Now this is something, okay, which we will discuss, okay, in the videos coming up. You get the VIX, the range, okay, as defined by the VIX about how much this instrument can move, and the 1 day range. So it within this, okay, the VIX says, okay, that it can remain between 19,400 and 19,051 only. This is a proprietary calculation, and in the entire week, okay, this is the range, okay, which is due, right? The open interest put call, the volume PCR, and the skew, etc., is measured over here. Now this is dependent on the instrument you choose at to find out what was the uh, open interest like, or what was the pricing of options around the start of the B period that day. I can do that via selecting the 9:30, 9:45 B period TPO, and I can do it, okay, for any date. I can do it for any TPO. If you want to go back, okay, to current date, then, okay, press reset, and the information in the tables, okay, would quickly change. You can go to the left of this strikes, and the right one, okay, would be for the puts, and you can quickly look at what time, okay, was the max OI built and what is the min OI, and this gives you an idea about how much the market is looking at it in terms of the open interest number. So if you get a number of about a time of about, let's say, 1 p.m. as in this particular thing, and the market is now, okay, well below it, it tells you, okay, that there was about 100,000 contracts, okay, which came off from 1 p.m. right up to the close, okay, at 1 p.m. So that tells you that open interest is leaving the call strike, and the market is no longer interested in adding open interest in that particular strike. So very useful if you are a deep options trader. Then the max OI and the time of the max OI and the price at which the max OI left, and you can compare it quickly, okay, to this change LTP. You would know, okay, how much, okay, the open interest is done. The DY and OI is from the open. So every time, okay, it is in red, and the number, okay, in red, okay, would also denote how much of the open interest from the previous sessions has come off that particular day. So it's still about 1,33,000 contracts for this particular strike. But you can see over here that about 26,000 from the previous days is already gone away from this strike. So same thing, okay, you can look at the right side over here. So whenever the open interest is building up, okay, that means, okay, the market is expecting, okay, price, okay, to stabilize. So from a writer's point of view, if you look at the market, okay, then, okay, a build up on the put side would tell you, okay, that there is a firm long side bias in the market. So max OI and min OI, keep a track of this. It will tell you, okay, how much we are displaced from the time, okay, the market put maximum inventory in that particular instrument. And then finally coming down to CE spikes and OI spikes, these bits of information can tell you quickly how much, okay, the market is wanting to move during the day, and whether, okay, there was a particular time in the day where the market moved a lot. So I like to keep my focus, okay, on this time over here. So if this time is close, let's say it's about 214, 217 in this particular example, and I can see a CE spike going negative and a P spike going positive, that tells me, okay, that the market is firmly in the control of long. So CE open interest came down, P open interest came down, and the time of that change was 214, 217. So around this time, the market adopted a more positive bias, and that is evident, okay, from the spike tables. So I hope, okay, you've got this information, okay, sorted, and we will cover more ground in the coming videos.